Hi, this is Randy Finney with the Right Side of the Chart, and today is Wednesday, July 18th, 2018. In this video, I want to take a look at the Dow Jones Industrial Average and go through the 30 components. Now, I usually don't focus much on the Dow. Most of my broad market coverage is based on the S&P 500, and that is because that is really the stock market. It's the most representative index out there, on nearly 500 companies in all different sectors, so it's much more representative of the U.S. economy than say the NASDAQ 100 now. That's why I put probably even more focus on the NASDAQ 100 because that's my preferred trading proxy. So again, it's not a very diversified sector. It's index, I'm sorry. It's lacking certain key sectors of the economy. For example, financials. It does not have any financials in the NASDAQ 100, and they are a key part of the U.S. economy. So when you look at the Dow or S&P 500, it does have financials. They do, I should say, and they're more diversified. But you get more bang for your buck. And as I often say, QQQ is like trading XLK, which is a technology ETF with an Amazon kicker in there. So QQQ, might say it's diversified in the fact that it holds nearly 100 components or stocks in there. However, it is extremely tech heavy. Over half of the returns come from tech stocks, and actually over half the returns come from just the top five, or I'm sorry, the top 10 components. The top five make up almost half the returns. So therefore, you trade QQQ, you're trading the FANG stocks, Facebook, Amazon, Microsoft, Alphabet, etc. Um, so I don't want to get off topic, but what I often do there is when I cover the Nasdaq 100, sometimes I'll drill down and do a look at the top five or top 10 stocks and see what their technical posture is, because that'll give us some insight to where that index is going. So we're going to do that now with the Dow. I'll run through this quick, and the takeaway from this video I think is twofold. Number one, if we can see where the 30 stocks in the Dow are going, we get a good idea where the economy is going. What key levels to watch? I'll give you my thoughts. We'll look at only two time frames, the daily time frames and then the weekly time frames. And the other takeaway is this: we all want to beat the market. That's the goal of just about any fund manager out there, and most investors. And in my opinion, by focusing on or trading or holding let's say let's just say the most bullish stocks, and either excluding or shorting the most bearish stocks in the index, because that's what I'm going to do here. I'm going to show you some of these have a bullish outlook, some have a bearish, and some are a little uncertain. So, you can hold the top 5 or 10 or so most bullish stocks within the Dow, either exclude or short the most bearish looking, and maybe ignore those with undetermined chart patterns that may be neutral. Let's say you can't make a strong bullish or bearish case, and that's in my opinion what's something I like to try to do is avoid sideways trades. The only thing worse than being stopped out and losing money on a trade is getting stuck in a dead money trade that's trades sideways for months on end, and sometimes years. So that being said, let's dive into the charts. This is the Dow, and we're going to look at the Dow Diamonds, DIA. This is the ETF, the tracking ETF for the Dow. The story is this: the bigger picture on that, looking at this daily chart, is we are smack in right now, the upper end of a very well-defined completely sideways trading range. We've been in that sideways trading range throughout 2018. We had a brief blow off top here, just like in the S&P 500. And since then, as you can see, this is a well-defined trading range, bottom of which is around 235, the top of which is about 254 and change. You can see numerous failures there at the top of the range so far, and we're a little bit above it now. And it's a similar story as you would expect, because the S&P 500, although there's more components, it's just more diversified. Let's try to give you a different board here. Oh, let's look at SPY. That's a little bit easier here. Okay, here's SPY. Find a clean board. There we go. And you can see a similar story throughout 2015 right here. We take the top of that trading range. There's the bottom. That's it. So, we all have our biases, our opinions on where the market's going, but until we make either a definitive break and not just a little limp through, definitive break and move out of this range, that's the story right now. We're already in mid-July, and this market's gone absolutely nowhere but sideways throughout 2018 so far. So that's it. Again, you'll say what you want, and I'll say what I want, where we think things are going. We'll know sooner or later. Now, the SPY is attempting to break out. I don't want to get off topic. That 279.80, really call it 280, is the top of that range. You can see we've had several failures there. I showed you the Dow's a little bit below the top of its range, and although we did break above 279.80 yesterday, it was not. We haven't had any impulsive follow through. You want to see impulsive, a big green candle and a breakout to the upside, a bullish breakout. You want to see an expansion in volume that we did not see. You can see these volume bars down here, yesterday's bar, and today again below average. So that is signs of non-confirmation. Now, you might say price is first and foremost, sure, but I wouldn't chase a breakout. We don't see it following uh, in the Dow right now. So let's just dive into those stocks, and again, we'll see what to do. All right, Apple. We're going to start here. I'm going in descending order of market cap. So Apple's the largest component of the Dow, of the S&P 500, of the Nasdaq 100. I believe it's the largest component of the Dow. I know it's the largest of the Nasdaq 100 and the S&P 500. Here's my daily chart. Same story. If you followed the site or even the YouTube channel for a while, you know that we have these divergent highs, divergent lows. Divergent highs have always been followed by a correction. So I should say that. Every now and then you'll see a divergent high that doesn't pan out. It might play out for a correction, more so in sideways in time, more so in price. But over the last 2 years, you can see they average into the low double digits, all the divergent highs before, and that's what we have right there. The most recent divergent high, if we happen to make a marginal new high now, it will almost certainly be a divergent high. In fact, these divergences are steepening. This is the same divergence has been building. These are just a series of consecutive divergent highs. We can move that up there. There it is, divergent high. And if we make another one, we'll have another divergent high. So, like I say, divergences in themselves are not sell signals. They're merely an indication that a trend change, an impending trend change, is likely. So that's Apple in the history. And then the bigger picture here, the weekly chart, much more significant for trend traders or long-term swing traders that are positioning for months or even years on a trade. And you can see the same story. These are all the divergent highs, all the corrections that we've had that have followed divergent highs. In other words, this was the divergent high here, 34% drop, 45. So the weekly time frame, we can see the largest divergence we've had on Apple throughout this entire bull market. Very clear negative divergence, not even close to being taken out at this point. And yes, we had divergence here. We had a correction. Again, these divergences can play out with micro corrections or pullbacks or even bear markets. And as long as they continue to build, it just indicates we're going to get a bigger drop when that finally comes. And there's a trend line to watch. So Apple is above trend. Let me just make that clear with divergences. So while my intermediate to longer term outlook would be bearish based on this. Near term, we don't have any type of sell signals yet at this point right now in Apple, but it's certainly one that I think the risk reward is not favorable for going long. So on that one, I would exclude um, and maybe put in a pile to look for a short when the time is right. But again, I don't see as much upside in some other companies as I do in some other companies here. Here's Microsoft. This one shows also on the daily chart divergent high, and again we've had a series of divergences. So I get that a lot. Hey, these divergences keep pointing out, and they do play out. They've played out for very profitable short trades. You get back in, and the important thing is these divergences continue to build. So while these were corrections, we may get a drop of 20% or more, and likely will if and when these divergences play out. But you can see they're very much intact. We need to confirm the most recent divergent high. We need to see a bearish cross on the PPO, and then I think Microsoft comes back in. And then more importantly, you have these long-term uptrend lines. These are very important uptrend lines that the previous corrections just brought us back to. So if these divergences play out, this chart would indicate these long-term trend lines are going to break, and that will bring us down a lot lower. And I think Microsoft, you're looking at sometime 2018, no later than first half of 2019, a drop down there to the 79, 67 level, and that's about a 24% drop. So I'll say it clearly. This is one, although it is in an uptrend, we don't have any sell signals. I think the risk reward is, especially if you're looking out months, even near term, is not favorable. it's skewed to the downside. This is a weekly chart, big divergences on the weekly time frame. Last time we had negative divergence on the weekly time frame on the Microsoft, we had a 15% drop after the divergent high. Right here, the time before that, we had a divergent high at this point. We broke down, back tested, although that was also a divergent high because it was an equal high. So the divergence line, I probably should have drawn it out for you here, extended like this. So it was just a series of two consecutive divergences. We had a 21% drop and then another roughly 21% drop. So again, without fail, we're looking at the entire bull market here, and these are the divergent highs that we've had, and they've all led to double-digit corrections. There is not anything in the charts that tell me why this time would be any different. And in fact, this one, we have a pretty long, powerful, well-defined uptrend line too. So if that breaks, time to get out of Dodge, or at least out of Microsoft, in my opinion. So there's one that I wouldn't be chasing right now. Financials. I did a video on Monday for members of the site. And XLF, I actually led with. I did a video on long trade ideas, and this was one of the most bullish sectors that I came across. And we've rallied pretty strong since. We've had a nice rally in the financials. Here's XLF. Now we're up to trendline resistance right now. So I think the bulk of the run, I said I was near-term bullish on that. And looking, if anything, that was one of the. I listed a lot of these leading bank stocks. There's Berkshire, gapped out, and already hit my first target out of that falling wedge pattern. JP Morgan is now at trendline resistance. So we had Berkshire at resistance I just showed you. JP Morgan at resistance after a nice run this week. Bank of America just broke out. Still a little more room to my target here at 3110, but getting a little stretched again. Wells Fargo not too far above trendline resistance, or too far below. Citigroup is just breaking out now. There's a downtrend line, divergent low. So again, there's potential for these guys to run. I'll give you a target right there. I usually don't give price targets for on individual stocks. That's usually reserved for members, but I'll just show you, kind of painting a picture here that this sector, and again, the reason for doing this video is when I cover QQQ, we're not seeing financial stocks. They don't exist in QQQ. So this is where this can give some near-term headwinds or tailwinds, I should say, to the Dow and the S&P 500. There's Goldman Sachs, American Express. All right, let's get back on task here. Got a lot of stocks to cover. So I was down to JP Morgan, and that one again, I should clarify. There's one. You can look for a breakout there. We had almost a divergent low. This is what I call almost divergence because we made a slightly lower low, almost flatline divergence there with JP Morgan making a lower low. So if it breaks out, it probably make a run towards the previous highs. So what I meant to do too is go back and look at the both the daily and the weekly charts. So here it is. Here's what I said in the video on Monday to members of the site on the trade ideas. I was near-term bullish, but I'm skeptical because there's crosswinds. The financials are broken down. You see this trend line? This goes back a long ways. Let's jump back to that weekly chart. Here's a trend line off the mid-2016 lows, pretty well defined, right? And clear negative divergence. This is the type of negative divergence I prefer to see, where clean separation right here between the peaks with that PPO dipping down, the RSI dipping down. So the cross currents are, I showed you the positive divergence on the daily time frame, or almost divergence on this one, but you just broke down from a long-term uptrend line. We backtested and we rolled over. Now it's caught support here around 105 or so. If that level goes, and based on this chart alone, there's a good chance it will. But it's hard to say. I don't have a position in this one right now. Trend indicator is still bullish, so maybe it pushes up. If you're bullish and looking for trade ideas, you might be able to ride this one up for a back test. But then ultimately, I think we go lower. This was a key breakdown, and more importantly, big divergence on the weekly time frame. So to me, it's more of a picking up nickels in front of a steamroller thing. Let's just say I'm near-term bullish, but intermediate to longer-term bearish on that, if that makes sense to you there. All right, XOM. Here's an uptrend line to watch on the daily chart. Negative divergence right here. You probably know, at least those on the site, that I am bearish on oil right now, and intermediate term as well. And here's, basically this one you just swing trade. Divergent low right here. Let's show you here. Divergent low, divergent high, wash, rinse, repeat, divergent low. There's all your divergence lines below. Divergent high. You just need a break of this trend line. That's probably going to bring XOM back to 79.90. I think it'll happen soon. Again, oil. This was also this line here. A lot of resistance. Watch as I circle these levels. You can see a lot of reactions there. A lot of reactions from above. So you can see that was an important resistance level all the way back here. Support back here. We broke it, and then we started a waterfall sell-off. That validates that line right there as a very important, significant support slash resistance level. It's resistance when we're below it. So there it is. You're at resistance, overbought with negative divergence. So I think there's more downside in ExxonMobil. Weekly chart. I don't have a great read on the weekly chart. I can tell you there's some support here around 72 or so, and there's a downtrend line there. So let's just move on to ExxonMobil, away from that one. Next one up. I'm on a weekly time frame, so I'll stay here and then go down to the daily. This is JNJ. Here's your weekly time frame. Big divergent high, just like we had back here. You can see we had a big negative, large negative divergence, and that played out for the biggest correction in this stock since the bull market started. That was about a 26 or so percent drop, just roughly measuring that. Very clear, clean negative divergence, just like we have now. So I see no reason why this one, well, it's already corrected quite a bit. Let's see how much have we dropped. We dropped about 18, 19%. Is that enough? Certainly. And I noted down here we have a bullish crossover on the PPO. But here's something else I noted, guys. So right here we had, you can see the PPO turning up, looking like it was going to make, and I think it did make a slight bullish crossover. But guess what? See, at the time, we were not oversold. You want to buy these stocks ideally on the weekly time frame. The best time to jump in is if you get a pullback to support, like a trend line right here, and oversold readings. These were the best buying ops in this stock in a long time right here. You can see you did very well after that one. You did very well after that one. So back here, looked like we had that bullish crossover there, but we weren't oversold yet. And what happened to the stock? That was when the bullish PPO crossover occurred. We dropped even lower, then we became oversold. So it's a matter of, will this play out, or what I think will happen here? We could bounce in the near term, but I think we'll probably head on down, and the stock will become oversold in the coming months. Maybe put in a divergent low, maybe not, but we're above trend, so I can't knock this one. I definitely wouldn't short it. It's just coming off trendline support, a successful test of that trendline support, but I'm a little skeptical of this crossover again. I would have preferred to see this one reach that 30 level or below on the RSI. Daily chart looked good. Nice. Look at this nice, clean, bullish falling wedge. This line here, there it is. And this upper trend line, we had a breakout and a back test, everything I like to see, but we've rallied into resistance. That is resistance. You can see it back here. It was support. It was resistance here. Support, support, support. Kind of sliced through it there a little bit, but again, a lot of reactions in the past on that level. So there it is. We are at resistance following that bullish falling wedge breakout. Maybe a pullback and possibly some more upside in J&J. I wouldn't short it here because it comes on the heels of this big divergent low, but the run could be over, especially if we're going to go down and make another thrust down lower and maybe become oversold on that weekly time frame. All right, I'm going to have to move a little faster to keep this video on track here. Visa. Here's our primary uptrend line. Just watch that. This one is comfortably above that uptrend line, but it also has the largest negative divergences we've had throughout this entire bull market. So there it is. This one continues to diverge. That's on the daily time frame. I should say a minute ago I said throughout the bull market. No, this is the weekly chart. So this spans the entire bull market. There was our divergent high back here. We had one in 2010, followed by a 33.5% drop. The next divergent high right here was back in, we topped out right around the beginning of 2014, followed by a 17% drop. Next divergent high, actually there was two consecutives. We had divergence at this point here where the crosshairs are, followed by a 22% correction, and then an 18% correction. We've come full circle. This is the first negative divergence since these divergent highs back there. So to me, it's not a matter of if, but more when this trend line will break and when we'll have our next double-digit correction in Visa. But going back to the daily time frame, we don't have much of a sell signal. We had a minor uptrend line here, breakdown and back test. When you see that, or at least when I see that, I go to the 60-minute chart, and there it is. So we have a little divergent high on the 60-minute chart, and that divergence could probably play out for a correction here soon. So I wouldn't chase this one here, but we don't have any like long-term sell signals on that yet. Not even close at this time. WMT looks better than most. We put in a divergent low right here. These are like what I like to swing trade, divergent low on the daily time frame at this point right here, and it's been moving up, although it's at resistance now, about 88.73. If we can pop above there, these are potential targets, resistance levels, maybe back test of this trend line. So this is one that I am more bullish than bearish on. Would have been much better to buy here following the divergent low or the break above 85.20. Let's look at the weekly time frame. Not much, but we do have a bullish crossover on the PPO right here. We also had what was about to be a bullish crossover there, but were rejected, and then we went on a lot like was it Visa I was just talking about, or one of the other ones where we were close to oversold, but we didn't quite get there, and then we dropped a little more, became oversold, and that was your buying up. And if you got in early, that was a sucker's rally with one more thrust down to go. That looks very similar, in my opinion, this little sucker's rally right here to this current rally here. So what I think will probably happen in Walmart, I think the most of the upside's already in it. We're going to take another thrust down, maybe come in and hit this trend line, get oversold on the weekly RSI, and that might lead to one of these buying ops like we had here, 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 and here. And that's where I'd look to get interested in Walmart again. I think I had this one as a long earlier this year and last year as well, actually. Moving on. UNH, this is the bull market trend line. You want to replicate this, just make sure you use log scale on your chart. Very well defined. That's well above trend right now, but with a divergent high. That's the weekly chart. UNH on the daily time frame. Bearish rising wedge. Negative divergence as well on the daily time frame. So I think the upside in this one's limited. Your sell signal will come on a break of that trend line. INTC, one of the more bearish stocks in the Dow, one of the more bearish stocks within the semiconductor sector, also the leading semiconductor. We had, this was pointed out at the time, bearish rising wedge pattern, very clean, very well defined. Breakdown, the initial kickback rally, which I believe is now over, close to over. Trend indicators bearish. That's referring to the 9 EMA being below the signal line here. So I think the upside in this one's limited before the next thrust down and to that 47.75 level, and then ultimately down here to about 43. So there's one that I think is ripe for shorting up now or very soon. CVX. Oh, did I cover Intel on the weekly? No, I didn't. There's a weekly on Intel. These are all the divergent highs, each and every one without fail. 28% drop, 34, 34, 14. I think there's more to come here. These are my, targets right here, longer term targets on Intel. CVX, Chevron Texaco, this is a weekly time frame. You had negative divergence here, long building, took a few years to build, breakdown, boom, big drop. Negative divergence. We had a big drop off that divergent high. So far, this seems like the initial kickback rally following that divergent high. The initial thrust down. Here, let me use blue. Initial thrust down, kickback rally, and we'll probably go on to break that. Just like we had an initial thrust down, little kickback rally, and we continue lower. At Chevron Texaco, not looking so good. Meshes with my outlook on the energy sector, on oil. There was a symmetrical triangle pattern we broke down a couple days ago, and we're following through to the downside. I don't see this one stopping until we get down here. I mean, there'll be maybe kickback rallies along the way, but I don't think we'll back test this triangle or get above it. If we do, you can draw a downtrend line right here. There's a downtrend line to watch, but here's a target right here. So I see more downside in Chevron Texaco. HD next, Home Depot, doesn't look bad. I think it looks to me like a little more upside in this one possibly. We almost have, we might have it. Yeah, now we do have that divergent high. So I drew the other day when I was starting to go over these stocks, I drew a line here showing a scenario or ready to highlight a scenario for you guys of maybe a new high, but we probably have just taken out that level, that previous high, or matched it. So we have divergence. Now we also have the room to push up higher. You can see these divergence lines are pretty steep. So if Home Depot carries a little higher, it's still going to be a divergent high. It's going to give us this rising wedge. We'll just have to extend that upper line. So this one's ripe for breakdown. It can break down anytime now. It can reverse now, can go up a little higher. Watch for a break of this trend line. That would be a sell signal on Home Depot. So there's another one. I see the upside being limited. We don't have any sell signals yet, but again, weekly chart, negative divergence, and again, room to certainly push higher, or we can confirm those divergences now as we've made an equal or higher high, and Home Depot could reverse anytime. PFE, Pfizer. This one looks like a breakout here, this trading range. So on face value, that's bullish. Here's a multi-month trading range right here, and we've broken out, but it's very lackluster. Again, you don't want to see that. You don't, if you can make out the volume bars down here, they're extremely low volume. Low volume breakouts have a higher rate of failure. Let's leave it at that, and we'll watch what happens here. If it fails, fewer things in trading are more bearish than a failed breakout, so we'd probably come back down to the bottom of this trading range. But if they can start, bringing some volume into the stock and bringing it up, it might have some room to run. There's a weekly chart, big negative divergences, but trend indicators are still bullish. So this one can continue to work its way up for a while, but watch for a failure back below 37.25, especially an impulsive move back down below. That would probably bring the stock lower in the coming weeks. Verizon VZ, it's at resistance right now. You can see pretty well defined, couple reactions there, support there, a big gap right here. So that one needs to take out 5170-ish, and it's pretty stretched right now, meaning overbought here. The PPO seems to be rolling over, so this one's probably going to roll down. I think that one's probably a decent short right now, an objective short entry, short here with a stop not far above for a pullback down here, maybe to that 49 or so level at least. That's VZ, longer term. It's above trend, not much of an opinion on that chart. Boeing weekly chart, big rising wedge with very steep divergences. The trend is certainly up. It continues to find support on this uptrend line. You can see we just rallied off it. Here's what the daily chart looks like. We had a divergent high right here, followed by a 16% drop. We pushed up, extended those divergences. We already had a little pullback, little correction, but based on the scope of these divergences, I think there's more to come on Boeing. And I'll probably come down here at about 267, 268, somewhere around there. PG looks or was looking better than most. We had this ascending broadening wedge pattern. We broke out, back tested it. I'm sorry, descending broadening wedge pattern, or aka megaphone pattern. Broke out, back tested, moved up. But how much of that pattern? It's, a good part of it's already played out. PPOs at high levels starting to turn down. I don't think I'd short that one here, but I just don't think there's a lot of meat on the bone. And again, bigger picture. You got to look at these bigger pictures here. This is a weekly chart, and boom. Last time we had a divergent high, we fell all the way from about where we top now down to that 67.11 area. That's support. Pretty well-defined support back here. So, and again, the way most corrections and trends play out, it's not unidirectional. You get these little kickback rallies along the way. So this, to me, is really the first kickback rally since Procter & Gamble topped and put in that high right there, that divergent high. So it would only be natural to think we're going to get another thrust down. So yeah, I wouldn't be chasing that one right now. Cisco, this is a weekly chart, trend line breaks and corrections. Cisco's a tech stock, and like most tech stocks, tends to just run in these trends, pretty well-defined trends. Very few periods. Here's one of sideways trading for a little while, but for the most part, this sucker's either trending up or down, and those trends are usually the uptrends usually end with a trend line break. You can draw pretty well-defined trend lines, and that's when you want to get out or short it. And you can see the negative divergence this time around to boot on the weekly time frame there. So there's Cisco. There's a daily trend line right there, which was recently broken. It's got some support here, but negative divergence on the daily time frame as well. So in the near-term outlook, the trend is now and has been bearish since it peaked back in May, and I think it can probably work its way down a little more there. KO. Another one that works well to the technicals. You want to short divergent highs and big correction, go long divergent lows. And there was one, the divergence played out well, but we've run into resistance, pretty well-defined resistance level. Look at all these reactions on this line here, reactions here, reaction here, and that's where we're at right now. So yeah, whether there's more to play out, if it does, I don't know if I'd short Coke. I'm not crazy about shorting these steady Eddie dividend-paying stocks, about 3.5% dividend. If it can break above that level, and I don't think it can do it without consolidating a little first, maybe a pullback, maybe an inverse head and shoulders pattern here, with this being the shoulder, head, right shoulder, and then go on and break on through there. So that's something you look for. If you're bullish, looking for more upside in Coke, look for that. Otherwise, you're at resistance now. So all I can tell you about this stock is that it is not objective to go long on a stock that is overbought at resistance. Doesn't mean it can't go up anymore, but put the odds in your favor. You short it here with a tight stop above, and it may pull back. But you just don't. You wait for a breakout if you want to go long that one. Still above trend. Here's a trend line to watch, but it broke. It put in a divergent high here on the weekly time frame, and you can see the negative divergence. So sooner or later, that trend line, like all bull market trend lines, will break. It's just a matter of when. So there's one to watch. Merck, gosh, I'm getting only about halfway through these, and I'm in the 30-minute mark. So maybe we'll wrap it up with Merck here, or I'll just fly through these charts real quick. Negative divergence on the weekly time frame, but it's still in an uptrend. I wouldn't. I don't know. It's coming up on a confluence of supply. A lot of price trading over here. There's a divergent high right here. We had a divergent high, broke trend. It's back testing the trend line with negative divergence. So there's one I wouldn't chase. I think the downside is this one's the risk reward skewed to the downside from here. Minimal upside if it gets up to around 64. So that one might provide a nice short. At most, I see this one running up here at about 67, just under the 67 area. That's a triple top where it failed before, three highs. Disney, negative divergence. There's the uptrend line. May want to work its way a little higher. I can see that, but I wouldn't chase that one now either. And it's also at the top of this pattern here, this triangle pattern. So there's your lines to watch. Bullish if it can really put this line in the rearview mirror with conviction. Bearish if it breaks this uptrend line there. DWDP, Dow DuPont, there's your trend line, bull market uptrend line, still above trend, no sell signals yet. There's your near-term trend line on the daily chart. As long as it's above that trend, the trend is bullish. But we also broke down mine below this long-term uptrend line here. You can see it on a two-year, a 4-year chart here. Well-defined uptrend line, divergent high breakdown. Trend indicators bearish, so I would look to position short on a break of this uptrend line, and probably for the next leg down in DWDP. IBM, one of the better looking stocks in my opinion. Divergent low here on the daily time frame, but what I've marked here, these white arrows show, again, I use this 9 EMA as a trend indicator. That's a signal line. When it's above this dash line, which is a zero line, the trend is bullish, as it was all throughout here and here. And when it's below, the trend is bearish. You can just look above at prices. So what happened? We had a bearish cross here. And also, the way the zero line works, it acts as support or resistance when the 9 EMA is above or below. So we've had, since the trend went bearish and the stock has been falling, of course, we've had one back test, two back tests, three back tests, and now we're back testing again. There is divergence, so there's a potential we can break above there. And if we do, and if you want to look to go long IBM, you want to see a break above roughly that 147.30 level. You want to see it impulsive, get that trend indicator back above there. So there's the bullish outlook for IBM. And I would target all the way up here at least. That's about 159.58 or so, possibly all the way up to this level here. However, we look at the long-term chart, and actually not bad either. We had a divergent high back here, and that set off this bear market in IBM. We had a divergent low here, at least on the RSI. Now we have positive divergence again on the weekly time frame. So one of the better looking stocks, in my opinion, in the Dow. Nike. This is our bull market uptrend line. We broke it. Broke it back here in 2016. We've been back testing, and this is what I call an almost divergent high. We almost have about equal Yeah, we can call it negative divergence there on the PPO and almost on the RSI. RSI made a slightly higher high. Watch this trend line here. Break of this trend line. We're back testing now. That would trigger longer term sell signal on Nike. And more importantly, to hone in on your entries or exits, here's a price channel on the daily time frame. Clear negative divergence at this most recent high, and your sell signal come on watch for a break of 75.88, but then more importantly below this uptrend line here, and that could probably send Nike all the way back to this support zone down here. McDonald's already broke below its price channel, and we broke below this trend line here. So there was our uptrend line, divergent high, breakdown, set up in this price channel, and now we broke down, back tested. This is support. This is your next sell signal, a solid break below 153. There's McDonald's on a weekly chart. Negative divergence on the weekly time frame. We had this rising wedge breakdown. There's that same channel, and there's that 153-ish level. A lot of thin air below if that breaks. GE, don't have much of an opinion on the daily time frame. This is an active trade on the site right now, but it's kind of going nowhere. We're getting paid to wait in this one. We've already hit our second target. So, that one, do what you want. If you raise stops, you might already have been taken out at a profit, but if not, again, sideways trading range, I don't have much of an opinion now. I wouldn't buy it anymore at this point, nor would I sell it if you're long, unless you just want to move on and deploy those funds elsewhere. 3M, MMM, downtrend line breakout, almost a divergent low, meaning we made this was a slightly lower low. If it was equal lows, that would technically be positive divergence because you had higher lows on the indicators, but it wasn't. Weekly time frame, we're right at trend. So we're on trend line support with a breakout on the daily time frame. This one looks good up here at least 208.33 and possibly more. UTX, not much of an opinion there, so I won't say anything to that one. Weekly chart, just it's above trend. And as long as it's above trend, the trend is bullish, and you can't really question that one. GS, Goldman Sachs, again, one of the financials I mentioned being bullish on lately, broke out, or bullish on the sector. I don't even think I covered this chart, but there it is, bullish falling wedge right there. Breakout recently, but it has resistance. But then the bigger picture is this. So like I said, there's near-term bullish developments on the financials, but longer term, we broke down just like we did back here. There was a 5-wave pattern down, and this is wave 1 down after the breakdown of this bearish rising wedge with negative divergence. So, how high we go, to me, it's just a matter of how high we go before the next leg down. Nothing's certain, but that's my outlook for the stock. AXP, there's your long-term trend line, still above it. And here's what it looks like on the daily chart. We have some negative divergence, so we don't have any sell signals yet, but this is a trend line to watch. And if that breaks, then you have a sell signal in AXP. CAT, this we have this channel here. These two lines, these downtrend lines, form a price channel. I don't have much of an opinion. You can go long at the bottom of the channel, short at the top of the channel, or wait for a break of the channel to position in whichever direction that is. But the long-term chart, it looks bearish because we just broke this trend line here with an impulsive candle, and then we're below that trend line, look to be flagging. So I would say the outlook for this stock in the coming weeks to months is bearish. TRV, that's bullish. Again, this is a financial insurance company. Breakout, same story in a lot of these financials. Bullish falling wedges, divergences, or at least downtrend lines that were taken out. There's your targets, that one. So here's one I'd rather be long than short right now, coming off trend line support as well. Targets are right here. And that's it, guys. Long video, longest video I probably ever made. If you've made it this far, congratulations. And if nothing else, hopefully you have some takeaway trade ideas or at least things to watch. Replicate those charts, set price alerts on those trend lines. Remember, on the weekly trend lines, all that matters is a weekly closing candlestick below. Anything that happens intra-week is not really significant because they could reverse and park it back above that trend line or on it at the end of the week. This has been Randy Fenny with Right Side of the Chart. Hope you enjoyed it.